So today we're going to expose the 5 bullish catalysts that suggest the diminishing returns theory of Bitcoin is dead and why we could be destined to see a Bitcoin supercycle in 2025. Now, despite what many of you may believe, the Bitcoin ETF only contributes to one of these bullish catalysts, and that is the fact that I believe it is going to create more demand for Bitcoin and less demand for altcoins. Are we ever going to see a crypto bull market ever again? I'm not so sure, but I think we should consider the following. We now have 11 Bitcoin spot ETFs open for trading. So now all of a sudden, we have institutional investors plowing billions of dollars of capital into Bitcoin. Now, these institutional investors simply have more capital than the retail speculators do. And it is normally the retail speculators who drive up the valuation of these altcoins. We can see by this chart here, Bitcoin dominance crashes every single time we get into the last 6 months of a Bitcoin bull market. And those last 6 months of a Bitcoin bull market is when all of the new retail participants enter the space. But what if we're going to see the first Bitcoin bull market that's primarily driven by institutional capital? I think this is a massive thing that most people are missing. I think 2020 was the inflection point that woke up the largest capital allocators in the world. Just think about it for a second. Since 2020, when Michael Saylor began putting Bitcoin on the balance sheet for MicroStrategy, we've seen the emergence of nation states like El Salvador, the Kingdom of Bhutan, Oman, and even Saudi Arabia begin investing into Bitcoin itself and Bitcoin mining. Okay, we didn't see any of this before 2020, and now we have BlackRock and all of their big billionaire buddies plowing billions of dollars of capital into Bitcoin for these spot Bitcoin ETFs. And they are literally going on a marketing campaign for Bitcoin.
The world holds on to old ways until it can't. When Bitcoin was born, it broke that endless cycle. It's not a defiance of finance. Bitcoin may help guard against the government devaluing your money. Finally, you can buy and hold Bitcoin in an ETF with the VanEck Bitcoin Trust, HODL. Search the ticker HODL in your stock trading app today.
So not only does the emergence of these Bitcoin spot ETFs open up the door for more institutional capital to flow solely into Bitcoin today, but it also changes something very interesting when we're thinking about the mindset for the retail investor, okay? Until today, the retail investor has looked at Bitcoin and they've said, look, I don't have enough money for $45,000 to buy a whole Bitcoin. Many people don't know that you can buy a fraction of a Bitcoin. And this is why you do see many of these altcoins worth very low fiat values pump a lot in bull markets because new people come into the space. They think, I can't buy Bitcoin. I'm going to buy Cardano. I'm going to buy Ethereum. I'm going to buy XYZ shitcoin that you want to name. But all of a sudden, what if they start looking at BlackRock's Bitcoin ETF, IBIT, that opened trading at about $25 on the launch of the Bitcoin ETFs, okay? Does this remove the unit bias for the retail investor? Look, I think some people are probably still going to buy altcoins, okay? But on the margins, I think you're going to see more flows from retail investors into Bitcoin, whether it be through these honeypots like these Bitcoin spot ETFs, is irrelevant for the argument we are making today. I just think at the margin, retail is going to be pushing more money into Bitcoin this cycle than they did crypto in previous cycles, okay? And now institutional investors are also probably going to be pushing more capital into Bitcoin than they would into crypto. So that is the first catalyst for why I believe Bitcoin can perform a super cycle. Let's move on to the second. Now, this is a very dangerous catalyst when we're talking about more demand for Bitcoin coming at the margins, because for the first time in Bitcoin's life, we have less supply of Bitcoin at the margins. We can see from this chart here that the available amount of Bitcoin on exchanges has shrunk by over 35% since 2020 alone. We can see the amount of Bitcoin sitting on exchanges peaked in March of 2020. For the first time in Bitcoin's life, coins have been precipitously leaving the exchanges since then. For the past 4 years, you've watched 1.2 million Bitcoin flow off exchanges and into the hands of long-term holders. Now, all we know about these 1.2 million Bitcoin that have left exchanges is the fact they're going to the hands of people who don't have a history of selling. I love this chart here. It shows the divergence between the long-term holders and the short-term holders is at the highest level it has ever been before in history. Okay, so that means a large swath of the Bitcoin is being held by people who don't have a history of selling. Okay, if you hold a Bitcoin or any, Bitcoin that's in your address for longer than 155 days, you're classified as a long-term holder. So this second catalyst for the Bitcoin supercycle is kind of related to the third catalyst I want to discuss today, and that is the Bitcoin multiplier effect. Okay, because Bitcoin is becoming more and more scarce and there's less and less Bitcoin sitting on exchanges for sale today, this is pushing the Bitcoin multiplier effect to its near all-time high. We can see from this chart here, today it is at 4.6x. And if I were to just draw a vertical line on this chart, before and after 2020, something pretty apparent pops up with the Bitcoin multiplier effect. We can see that before 2020, it never got above 3.5x. But this diminishing amount of Bitcoin sitting on exchanges is actually materializing itself in the multiplier effect. We can see in the 2021 Bitcoin bull market, it got above 4x and before crashing back down in the bear. And again, today it's back up above 4.5x and closing in on another all-time high. So for those who don't know what this is, maybe we should explain what it is. So for every $1 that tries to flow into Bitcoin today, it pushes the market cap up by 4.6x. Okay, so if we have theoretically $100 billion of demand coming in for these Bitcoin spot ETFs this year, like the multi-$100 billion bank Standard Chartered believes, that means it's going to actually push the Bitcoin market cap up by not $100 billion. No. It's going to push the Bitcoin market cap up by $450 billion. So again, let's appreciate all of this was happening before these wave of Bitcoin spot ETFs have been approved last week. Okay, these bullish catalysts were set into motion 4 years ago when the supply suffocation began. Okay, and now let's start talking about the fourth Bitcoin catalyst that I believe could trigger a Bitcoin supercycle. It's nearly just perfect timing that we're seeing an historic supply suffocation happen at the same time that we are witnessing a demand shock. Okay, we're having Wall Street flood into Bitcoin, and there's only 2 million Bitcoin sitting on exchanges for sale today. Okay, now let's talk about this fourth and final catalyst, and that is the Bitcoin double halving. Okay, this is a big and complex subject, so we might break this down in a whole nother video, but the kind of high level thesis of what the Bitcoin double halving is we are analyzing the Bitcoin supply shocks that happen every 4 years wrong. Okay, so everybody can look at the amount of Bitcoin being paid to the miners decreasing every 4 years, and it's becoming a smaller and a smaller impact if you compare this amount to the circulating supply of Bitcoin. But I don't think we should be using the circulating supply of Bitcoin. I think that's the wrong metric we should be looking at. Okay, I believe that we should actually be looking at the highly liquid supply of Bitcoin. Okay, so think about it. There's 19.6 million Bitcoins in the quote unquote circulating supply of Bitcoin, but how many of those are actually available for sale? Well, that's why I like to go over to this chart here, because it's showing you two things. It's showing you the amount of Bitcoin sitting on exchanges, and it is also showing you the highly liquid supply of Bitcoin. So now this is where we run a little bit of math. Again, I just want to hit the double halving thesis in under 2 minutes, so I'll try to keep this super brief. But what I've done is I've looked at the amount of Bitcoins mined in the year before each halving, and I've compared that to the amount of Bitcoins mined in the year after each halving. So I've done this for 2012, 2016, 2020, and I've projected it out for 2024. And what I've done is I've compared this year over year supply shock that we do see around each Bitcoin halving, and I've compared it to the circulating supply of Bitcoin, which I believe is the wrong way we should be measuring these supply shocks. But then what I've done is I've also measured these year over year supply shocks against the liquid supply of Bitcoin. And it gives you this table right here. We can see that the year-over-year supply shock of Bitcoin in 2016 was 77% less than the supply shock in 2012 when we are looking at this highly liquid supply of Bitcoin. Now, this is what most people expect to see. You expect to see a halving in the supply shock. So that would be 100% less than the previous halving epoch. So we kind of saw that in 2016, and that's, what we expected because the highly liquid supply of Bitcoin was rising. We hadn't quite hit that 2020 inflection point. Speaking of 2020, when you have a look at this year-over-year supply shock, it was 85% less than what you saw in 2016. So again, we expect to see this number around 100% if we're going to see a quote-unquote halving. But what's really interesting is when you project out to April 2024, we can see that when we analyze this supply shock, the 2024 Bitcoin halving supply shock is only going to be 24% less than the 2020 Bitcoin supply shock. So this is why I believe we are actually going to witness a quote unquote Bitcoin double halving in 2024. And again, this has nothing to do with BlackRock. All of this data has been baked into the cake over the past 4 years of data since we started watching those coins leave exchanges. But now that we start talking about this historic demand shock that we are going to see in the space as Wall Street tries to flood into Bitcoin, we need to start talking about what a super cycle actually looks like. So most people believe that Bitcoin is going to continue seeing these diminishing returns of Bitcoin. And that's where you continue to see less growth in each Bitcoin bull market that we see every 4 years. And we can see that each bull market, the returns have gotten smaller, okay? 2013, we got 100x. 2016, we saw a 33x. In 2020, we only got an 8x. Many people expect this trend to continue down, but I don't think that's the case. I've actually made a case in a previous video that we should be looking at an average of the 2013 and the 2017 Bitcoin bull markets because the 2021 Bitcoin bull market was historically strange, okay? We had very interesting things go on. We saw China ban Bitcoin mining in 2021. This kind of put an early end to the bull market, and it broke the parabolic trend that Bitcoin was on in late 2020, early 2021, when it ran from like under $10,000 all the way up to $60,000 in a matter of months, okay? China came out, the second largest nation state in the world, and they said, look, we're going to ban Bitcoin mining, and we can see what happened to the Bitcoin hash rate and the Bitcoin price. Both plummeted. And let's not forget, only months later, we also saw the emergence of FTX become the largest exchange in the world. And we found out later on that FTX was supposed to be holding over 80,000 Bitcoin on their balance sheet. And when the tide went out and we got to find out they were swimming naked, they were found to be holding 0 Bitcoin. They were essentially naked shorting the price of Bitcoin. All of the Bitcoin that their customers thought they were buying and they thought they had on the exchange, they had none. So I believe those are two very big external reasons for why that 2021 bull market should be ignored. And that's why I think we should be looking at an average return of the 2013 Bitcoin bull market and the 2017 Bitcoin bull market. And what if I told you that if we combine the growth of those two bull markets together, we get an average of around 66x. And if Bitcoin were to replicate what it did in 2013 and 2017, you would be looking at a price tag of Bitcoin of $2,660,000 in December 2024. Don't get me wrong, I know exactly how crazy that sounds, but before you call me crazy, you're going to want to check out my maths, graphs, and statistics that I use to back up this pretty crazy potential 12-month bull market we might see in Bitcoin. If you want to check out all of that and learn a little bit more about this topic, you can check out the video I'm going to slap on screen right about there. And with all that said, hope you guys enjoyed this video. Let us know in the comments down below what you thought of this one, and make sure you check out that video right there. I will see you all in the next video.